Hi everyone, welcome back to my YouTube channel. Today we are going to be talking about investing. So I think I'm going to break this video in series because there are a lot to discuss under this topic. So I'm going to be sharing with you different asset classes that you can invest in and how to go about it. So stay glued to this channel to find out more. Now so today I'm going to be talking about stocks or shares as we call it. So what is it exactly? When we talk about a share or a stock, we're saying that it is a unit of a company that you own. So when we're talking about investing in stocks or shares of a company, you are buying a part of the company. In other words, you become a part owner of that company. There are two major ways you can buy a share of a company. The first is through the primary market route, so that means you are buying directly from the company. So I remember a recent, but not exactly a recent occurrence, there was an opportunity to buy MTN shares directly from MTN, but of course through different investment houses. So that is the primary market, buying directly from the company. The other route is going through the secondary market, and you can go through that on the Nigerian stock exchange. So I'm speaking about Nigerian stocks now. So there are different asset management or investment houses in Nigeria that you can go through. So essentially you need a CSCS account to buy shares or stocks. So this is the meaning of CSCS. There are different investment houses out there that you can go through to get started, so don't need to stress. So let's really understand the stock market really. So the first thing is, it's a very high risk investment. There are several stocks or shares on the stock exchange that have gone down in value as of April 2024. So it is a very high risk investment, but there's this logic: the higher the risk, the higher the return. You can expect a 152% return on a risk-free investment. For example, an example of a risk-free investment is a government bond or a government treasury bills. When you are talking about investing in the stock market, you need to understand that you could either lose as much or you could either gain as much. So number one rule of thumb that I always emphasize is know your risk appetite. What kind of investor are you? Are you a low risk investor or a middle risk or a high risk investor? You can't have majority of your investment put into stocks if you have a very low appetite to risk. So you need to take note of your appetite to risk, and then you invest accordingly. You structure your portfolio along that line. So but if you are okay with taking higher risks, then why not structure your portfolio along that line, having more of it in stocks? What is the goal of that investment? You need to know why you are investing. If it is for maybe probably you want to pay for an exam, for instance, I think you would consider putting it in a more stable investment. So the reason for investment would also determine the kind of asset class you are going to put your money in. There are different investment houses out there that you could go through to invest. So I don't want to mention any particular name in this video. You can check on Google investment houses in Nigeria, and then you go through the ones that are popular. You can choose one or two that you would like to invest with. I'm not going to mention anyone in this video. Alright, so talking about stocks, you are not just limited to Nigerian stocks. If you want to go global, technology have made it easy. This is the reason why I love technology, because technology have made it easy for someone like me in Nigeria to own a stake in a company in the USA. Bamboo is an example of a platform that you can buy shares of global companies. The interface is very seamless. You can invest. Now this is not a promo video. I'm only mentioning because I use it and it is very easy to use, because so you can invest in companies in the USA, different countries, on Bamboo. all you need to do is fund your wallet and then go into the market when the market opens and buy the shares of your choice. One beautiful thing about using that platform is you could actually invest in what we call ETFs. That's the exchange traded fund. The meaning is right here. So essentially, instead of just buying one share, because again there's what we call diversification in investing. You don't just buy one type of investment in an asset class. You want to spread your risks around. So ETFs enables that for you, so you could actually be exposed to smaller units of different companies all at once by buying just one ETF. So it's really, yeah, so I think that's one thing I love about using Bamboo. So leaving the global markets, let's go back to the domestic market. Let's go back to Nigeria. Yeah, so like I mentioned earlier, very important is your risk appetite, and the reason why you are investing would actually determine what kind of investments you should do. So there are two different ways that you could make money off the stock market. So the first one is dividend payment. So there are several companies that pay their investors dividend either on a quarterly basis, biannual, or annually. So that's one way to make money off your investments. Of course, your original amount that invested is still there, but then you receive cash dividend, and you could also opt to reinvest your dividend. That is, you could choose to reinvest your dividend in the same company, or you receive the cash, as the case may be. So that's one way of making money off your investments in stocks. So the second way is when your investment appreciates. So for the price appreciation, I'm going to give an example, a dummy example. So let's say a company called Your Finance and You is listed on the Nigerian Stock Exchange, and you bought it at 10 naira per share, and you bought 200,000 units. So that means you invested 2 million naira in Your Finance and You. Let's say you bought this as of January 2024, and then by April the share price already appreciated on the Nigerian Stock Exchange to 15 naira per share. So that means your 200,000 units shares is now worth 3 million naira as of April. You've gained 1 million naira extra on your investment in Your Finance and You. So you only gain in that instance when you sell off that investment. So it means you get 1 million naira in profits, you get your 2 million naira capital back, and then you get your 1 million naira in profits. Another approach is withdraw your 1 million naira in profits and then keep the 2 million naira in the account. So that's how you cash out on Your Finance and You on stock exchange. So those are basically the two major ways you could gain on your investment when it comes to stock investing. And there are several people that actively trade on the stock exchange. At least they are not holding it for the long term, they're only holding it for price appreciation. So probably they've done their technical analysis, or they are very sound in the financial markets, and so they know which stock to buy at a particular time, and then they know when to sell off to gain. When we talk about stocks in general, it's more suitable when you look at it from a long-term perspective, when you invest in it for the longer time. That way you do not have IBP when the share price is going down on the stock exchange. There are different market dynamics that will affect the price of stocks on the exchange. So really the best way to invest is longer term when it comes to stock investing. But then, like I mentioned, you could actually go the approach of trading, which is very short term in nature, just to make money off price appreciation. So longer term investors gain via dividend received from these companies. Alright, so let's talk about the amounts needed. You could invest in stock market for as low as 5,000 naira. A lot of companies listed on the stock exchange, their share price is as low as 1 naira, 2 naira, 2 naira 50 kobo, or even 27 kobo. Very funny unit prices that you see. There's also as high as 1,400, 1,500. or around just 30 naira, 20 naira, 50 naira per share. So really anyone could invest in the stock market. I mean, now that you know this, you can't give an excuse of I don't have so amount in my account, and so that's why I've not been investing. So actually you don't need that huge amount before you start investing. You can start your investment journey with very minimal amounts. So don't say lack of funds is an excuse. It's not an excuse. Start investing, and this is the time to cultivate that habit of investing. It should be your habit, really. Start investing. This video is not a financial advice. I repeat, not a financial advice. All content on this channel is meant for educational purposes only. Reach out to your financial advisor before making any investment decision. Thank you. So if you found this video helpful, don't forget to hit the like button, share with a friend. If you're yet to subscribe, please subscribe and share with someone that you know that would need to hear this. So if you have further questions regarding this particular video, you could drop it in the comment section, or you send me an email. My email address is in the description below, and I'm going to be happy to respond to all your inquiries. So in my next video, I'm going to be talking about other asset classes that you could invest in. So stay tuned.